So the whole of the software sector has taken a hit, but there is an undervalued AI company which has delivered its 17th consecutive beat and raise quarter, 17, that is over 4 years of outperforming every single analyst on Wall Street. The company in question is Zeta Global, and in today's video I'll be running through what the company does, their new AI agent Athena, and whether I will be personally opening a new position. So this is the Brummie Investor channel where I break down companies to see if they are a viable long-term investment. If you don't want to miss on any future videos, drop us a follow. And with all that being said, let's get into the video. So having a background look into the company, Zeta Global, stock ticker ZETA. They are an AI-powered marketing cloud platform which helps enterprises grow their user base. So the current market cap of the company is about $4.15 billion, so they were a small cap, but they are definitely considered to be a growth company. They are located in the SaaS sector, which stands for Software as a Service. So examples of this will be Salesforce, Microsoft Office 365, or even Google Workspace. So the headquarters is located in New York in USA. They have a current employee count of about 2,200 employees, and they were founded in 2007. The CEOs are David A. Steinberg and John Sculley, which was the former Apple CEO. So you might be thinking, what does a company, Zeta Global, actually do? So put simply, Zeta Global is a company which helps firms acquire, grow, and retain their customer bases through their marketing platform ZMP. They have a similar business to the monopolistic businesses like Adobe and Salesforce, but the key part is that they are built from the ground up on a massive proprietary dataset. So a proprietary dataset is just privately owned and controlled data, which is key as it provides more personalized insights, which the likes of Salesforce and Adobe aren't capable of doing. Following on from this, they own a massive database of signals and profiles, which will ultimately help with the exponential growth of the company. So some key recent news is the Marigold acquisition in late 2025, which they bought for $325 million. So Marigold is an enterprise software which is made up of various different marketing companies. This is all significant amounts of data which will all feed into Zeta's AI and help train it. So what are some potential catalysts for the company going into 2026? So one of the biggest catalysts for the company is the AI agent Athena. It is described as their flagship model and where the growth is being priced in for. Some people have said it seems to have a similar growth trajectory to Palantir. Athena will act as a digital colleague connecting all the dots together, and this directly links to the OpenAI partnership. With AI evolving, Zeta is planning on transitioning towards an agentic AI, which is much better at reasoning and acts in a similar way to the brain. This helps to transform the platform into an intelligent operating system. So following on from this, we have GEO, which stands for Generative Engine Optimization. It is another key catalyst for the company. Put simply, it is optimization of content within the LLMs like ChatGPT, Gemini, and Perplexity. It launched in late 2025 and this is key for this year as traditional search volume is projected to reduce by 25%, so this ad traffic needs to be able to go somewhere. So we can have a look at some of the broader market news regarding the sector. So the SaaS sector has taken quite a big hit in the last 2 weeks. Cloud giants like SAP and ServiceNow have scared investors with the increasing capex costs on AI infrastructure. As Zeta operates within the sector, they have been caught in the crossfire and taken a hit. It is the same story for Microsoft. They recently posted their earnings, which wasn't the best, but critically, they also guided for an increase in capex. So clearly, the AI race is real, but these companies need to be able to justify their spending. The likes of Meta had increasing capex spending on AI, but there is clear growth for Meta, with Jensen publicly stating that Meta will be a top AI deployer. In regards to the potential regulatory headwinds, the EU AI Act is now in full effect, so this directly affects data, so they need to be careful with the data they collect and transmit. So next up is the financials behind the company. So having a look at the latest earnings report, revenue came in at $1.29 billion with guidance for the financial year of 2026 being aimed at $1.6 billion. This represents a 27% increase year over year. The growth is similar for adjusted EBITDA, where current year came in at 275 million, with 2026 predicted to be 354 million, showing a 28% increase. Looking at the free cash flow margin, it came in at 141 million, with guidance for 2026 projected at 209 million, so a 69% increase year over year. So overall a strong report. Zeta is shifting to becoming a profitable growth company. However, they do still report GAAP net losses due to stock-based comp and acquisition costs like the Marigold acquisition. However, recently they have become Rule of 40 profitable, which is a key metric within the SaaS space. This means that the sum of the revenue growth rate and the profit margin are greater than 40%. It shows the business health is reliable even at extreme growth. Another important metric is that Zeta has beaten on earnings and exceeded on financial guidance for the last 17 quarters in a row, so this is something key to take into consideration. So taking all these factors into account, is it a buy right now? So the bull case, Zeta continues to take shares From the larger cloud-based players like Salesforce and Adobe, the growth is justified as the platform is unified and growing quarter over quarter, year over year. And finally, if Athena is able to hit its benchmark and targets, this could be the big push towards the revenue expectations. On the other hand, we have the bear case, where there could be potential risks with a Miracle acquisition down the line. This would potentially stall growth until problems are resolved. But the more pressing issues are the AI headwinds, specifically CapEx costs with the technology sector. If AI costs continue to grow and scale faster than revenue, then the fundamental growth of the company will begin to wear off. For me personally, I feel this company is undervalued within the sector and the market. Looking at the average price targets, worst case it is around $25, with best case being within the $45 to $50 range, which is 170% upside from current levels. I have been buying the stock and my average hits about $21, so I'm hoping for about $30 plus dollars come the end of the year. So thank you for watching the video. Remember to like, subscribe and leave a comment below as it really helps out the channel. I'll be documenting my whole investing journey here on YouTube, so make sure you don't miss out on any future videos.